Hey guys, so I thought I'd make a quick video explaining the low time frame analysis on Bitcoin and just focusing purely on Bitcoin, nothing else, um, and just looking at it on a low time frame basis and see, my plans going into the remainder of the week with CPI tomorrow, and hopefully this trade plan will go into the rest of the month. The high time frame analysis was provided in my last video, so if you guys haven't checked that out, go ahead and check it out. But we're just going to be focusing on this range, and hopefully it holds. But there are some contingency plans of what you can expect if this range is lost, and so on and so forth. Okay, so quickly jumping into it, this was the trade setup that I gave in the last video. We got a nice move up to almost mid-range, but it gave a nice 6% move up almost, and hopefully you guys took that. We had a perfect rejection from a nice supply zone. Okay, so we hit directly into it and then went to retest it. So this is resistance, and on a lower time frame, the 2-hour, we had a bull flag here, right? We had a breakout. There is the retest. We retested it perfectly. Zoom in. Okay, we retested it, and it gave almost a 1% move there. But again, we hit this resistance area. Okay, so this is a very important level. Basically 57 to 58K is a very important level, and I'll explain why. Right, so right, support, 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 right, support, deviated back, okay, bounced, lost it, deviated back under, and then rejection, rejection. All right, now this was the same level that I explained in the Discord that we needed to hold before we saw that 53 to 50K demand zone, right? So this thing here. And going back here, you want to reclaim this 57, 58K level to push into these range high levels. Now, if we go back to the 4-hour, we got to ask ourselves, did we just put in another lower high? Okay, now I can go to the daily and trickle down, right? So here's your higher high, right? Lower low, lower high, right? Lower low, double top, lower high, lower low, lower high, lower low, lower high, and this actually did make a lower low. I'm gonna show that from a line point of view chart. Okay, see, that was a lower low. We did make a lower low structurally. Okay, so back here, let's go back to candles. If this is another lower high and we don't come out on top, looking at structure, we should go down to make another lower low. And the lower low is below this candle close, so below 53K. All right, I don't look at wicks. You look at candle closures, right? Okay, candle closures. So below 53.9K is the next lower low. Now, what do I expect going into CPI? All right, so we're expected rate hikes, or sorry, rate cuts, right? So if bullish, if price action is bullish, I'm just going to remove this. We should see a rally in this area. So this is the level that we want to hold, 55.8 down to basically 54.6. Why this level? Okay, we have support that was once held around like 55.8. We lost it, right? We've reclaimed that support, but we haven't flipped it to support. We just reclaimed it. Okay, here's a lower time frame. So you need, this is now an SR point, you need this level down to this level, which is support, to hold. Okay, because if we close below, and do something like this, we have broken this low time frame trend, right? Break down below, turn this previous support that we just reclaimed, if we lose it and turn it back into resistance, right? Or it's actually going to be resistance. This is just a deviation. And then we continue our grind down. So if we retest this level, all right, and I'm looking at it from a 4-hour perspective, we need to come, wick, and close back above this 55.8K level. We may not go down here, which is a demand zone. This is actually a 2-hour demand zone here, or slash order block, but you're looking for a wick, close back above, make another higher low on a structure base, right? And then continue the grind up, hopefully to range highs. So this would be the potential setup to take. All right, and I'll probably put my stops like below 53.4. Okay, and you're looking for almost a 3-hour trade, right? So your first TP would come around this area again. Second TP probably around like 60, 60.5K, and then back into range highs for your final TP. Now, lose this, close below here. You can stop yourself out manually and then grind higher. For those that are in the Discord with me, we are spot long from 55.3K, so we're just chilling. But it's going to be pretty volatile. If you are not experienced with leverage, I recommend sitting out. Just experiment with smaller positions if so. But now let's take a look at the short side of this. Right, so this is our now if we don't get this long here, right, you have to wait for confirmation, right? So we had this low time frame bull flag, we broke out, deviated back under, structure of this bull flag was lost. So now this is an area between 55.8 to 58.6, which is the mid range. This is the area where you want to just relax and wait for confirmation. Okay, we have a whole lot of chop happening. So what do? You got to give yourself confirmation for a 4-hour closure above this mid-range, right? Whenever we have a 4-hour closure above, we continue growing higher. Now, a closure just means a reclaim of this resistance back to support. It does not mean we flip it to support. We just reclaim the resistance, okay? So that's going to be a riskier trade. But for confirmation, a breakout and retest hold, we should continue to grind higher from here to there. So if that happens, your setup would look something. I can't give you the stop because we haven't really had the price action for that to develop, but it would look something like this, right? So long up until there for about another 3-hour trade. Okay, this one I have a tighter stop because we are at mid-range. It's going to be a riskier trade, regardless of if we are breaking out for the first time. It's just mid-range, so it's going to offer that rejection. Plus, the importance of this 58K level, like I mentioned, is crucial. All right. So that is option 2 in case we don't get this one. All right. Now, shorts. Okay. I still think that this is a relief rally until we flip 65K to support. Again, greater details are posted in the Discord. Until we flip 65K to support, I still think this is all just a relief rally, and we'll see it from there, right? Now, the short looks something like this. All right, let's go ahead and draw some fibs. Right. So you most likely will see some rejection here at the golden pocket. Okay. Now that there are a whole bunch of short setups that you can give here, right? I'll talk about every single one of them, but obviously, if you're playing a range, this is the range highs, deviation. Range highs is typically going to be an area where you are going to short. All right. You play the range until broken, right? Because we had the range lows here, we broke out, we retested it, we reclaimed it. We reclaimed it first, then we tested a support, and then we continued grind higher, breakout, retested the diagonal breakout as well. Range highs, you typically short, Okay, first TP if you're swinging would be mid-range and then range lows. Okay. Now this stop is a little bit wide. It's about 2.3k difference between the entry and the stop loss. So if you're taking this wide of a stop, you'd have to go with lower position size. Otherwise, you have to adjust your stop loss to probably like here, right? So if you enter around 62.7, stop loss around 64k-ish, right? Now you have a higher risk to reward, same size as you would if you were to do this, right? Because the stop is wide, you go with a lower position, but when you do this, okay, the stop loss, if you were to get hit, would be the same as if you were took this, okay? Now, this would be your swing long play, all right? If we're taking a look at, let me just remove these. Okay, let's draw some fibs again. So we take the fibs from the highs to the lows, all right? Now you have the golden pocket, and then you have the 786 fib, which correlates again with the swing high slash range high play. Now this golden pocket here, okay, is also a 4-hour order block. So you could possibly take a little short attempt there. Stop loss, easy invalidation above these wicks here, okay, and the first TP would come at mid-range ish. Basically, if you're shorting, your TPs come at levels of support. All right, so I'm not going to handhold the positions. If profits are good enough for you, you can go ahead and take it. But that is going to be your TP1, right, and then TP2, and then TP3. Okay, so all of these offer roughly about a minimum 3-hour trade. This first one gave a nice, the long that we took, which was, okay, this gave a perfect 3-hour trade almost already, okay, but 3R, 3.26. This one is tighter, so about 6.5-hour trade and 3.7-hour trade. All right. You basically want to risk about like 1 to 1.5%, just in case this is a lower high and then we go lower. But these are all valid trade setups that you could take. Even this one, if we were to add more confluence, right? Not only is it the golden pocket, okay, but we have resistance, right? So this is also resistance along with the golden pocket. So there's a lot of confluence here. And if we're taking a look at my favorite like pattern to trade in a downtrend or a bear market, that is the bearish Quasimodo pattern. I'm going to show you guys what that is, but this also has a bearish Quasimodo pattern forming here. One sec, let me see if I can get that going for you. Okay, so you have your again, let's take a look at this from the line chart perspective, right? Higher high, higher low, higher high, higher low, higher high, right? We came back down over here. We made a lower low. If this continues to grind into this area, it comes to correlate with the golden pocket or the next lower high point, right? It's not exactly the neckline of the higher high, but perfect area for a bearish Quasimodo pattern. And if that happens, then you have a good amount of confluence to take that trade. But again, I would only risk like 1% to 1.5% of your portfolio, knowing we're going into a highly volatile CPI session. Even though the Fed wants to come and say we're dovish with rate cuts. Who knows? It's still September. September has been historically a bearish month, so just be cautious in whatever trade you are taking. And again, if you are not experienced, I would suggest sitting on the sidelines, let the range form, let the shenanigans happen, and then take it from there. All right. So until this range is broken, these are your setups. All right. If we go to range highs, reject, right? Again, you're going to look for to long range lows around 54 to 55K. Now let's talk about the contingency plan if we break to the downside. If this is going to be our current lower high, then structurally you are looking for another lower low. Okay, that would have now go check out my high time frame analysis in my previous video. But if we break down below, okay, retest from this low time frame trend line and reject, then you have a potential short setup wherever the rejection is, close below first, reject and confirm, stop loss somewhere above resistance, right? And then you're looking for a move down. Okay. So there are Elliott waves here. I'm not going to get into the waves and the impulses here, but that is the plan. Okay. Now I talked about the importance of these 53 to 55K level. If this 53 to 55K level, this demand zone is lost, then you are looking for that weekly demand zone. But we're going to take it level by level first, right? We held 54K. Actually, we bounced from that 53K level first, right? So it's still holding. Liquidity was grabbed. However, it's been turned to support. Hold that. We should gun higher. 61 to 62K would be that range, previous range low level. Again, go watch the last video. But that is the low time frame analysis that I have, and those are your potential setups. If I do give anything, it's going to be in the Discord. However, it's still up for grabs on whatever you guys want to do. All right, so I'll catch you guys later.